If you think 3,000 sounded insane, how about 40,000? Because somebody asked me, well, what would it take to set gold behind the currencies like we're seeing what's happening in Zimbabwe? Maybe that's the beginning of a movement to utilize gold to regain the public confidence in the currency. Well, in order to cover all of the debt that's out there on a global basis on a 1-to-1 ratio, which is probably not going to happen immediately. I would be surprised if it did. We're not ready for that yet. But in order to be at gold's fundamental value in relation to dollars and relation to the debt on a global basis, you would see spot at $40,000 an ounce.
Market observers suggest that concerns over escalating U.S. government debt have fueled recent spikes in gold prices, despite the Treasury market appearing relatively unconcerned about the nation's fiscal trajectory. Although gold prices tend to rise as U.S. debt increases, numerous other factors can also influence the market, including market sentiment, central bank policies, and global economic conditions. With her extensive experience in the market, the renowned financial analyst Lynette Zang points out the rareness of gold's recent surge to $3,000, citing technical factors. With a keen eye on global economic trends, she anticipates a seismic shift in gold towards $40,000 per ounce globally as a response to the need to address existing debt. From Lynette's perspective as a seasoned analyst, she highlights the inevitability of the recent surge in gold prices. Despite various efforts to suppress it, economic forces prevailed, resulting in a breakout that unveiled gold's fundamental worth. Prices could rise to $2,300 per ounce in the second half of 2024, especially against the backdrop of expectations that the U.S. strong physical demand for gold is also fueled by its appeal as a safe haven asset, and investors looking to diversify amid lackluster performances in other asset classes. In her analysis, Lynette also discusses silver, indicating a potential parallel trajectory due to its undervaluation compared to its true value. The uptick in silver prices, currently approaching the $29 mark, has been recognized by market experts. ANZ commodity analysts attribute this to factors such as increased industrial demand and Middle East unrest, and suggest that silver still holds growth potential. They argue that the ongoing economic recovery and the expansion of green energy projects, which often require silver, support a positive outlook for this metal. Now, we present the clips of Lynette Zang's insights from her recent interview with SOAR Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Pressure on something and you hold it down because a rising gold price is an indication of a failing currency. Central banks and governments do not want people to understand that that's what's happening. But the longer you hold it back, the higher that spring will go when it is released. When it is released. So what's happened from a technician's perspective is exactly what I just showed you. The price of gold had been suppressed, even as global central bankers have been buying it as quickly as possible at the highest levels as possible, because they certainly know what they're doing to their currency. So technically, this breakout had to occur. I mean, personally, I've been in these markets I became a stockbroker in 1986. So a four peak top is so unusual. So the move toward that 3,000 is simply a technical piece where, again, you suppress the price and now the price is running because it's broken above that top. That's still 3,000 will still not reflect its true fundamental value. And I did just a little quick calculation on a global basis. So here, I'll throw this out at you, Kai. If you think 3,000 sounded insane, how about 40,000? Because somebody asked me, well, what would it take to set gold behind the currencies like we're seeing what's happening in Zimbabwe? Maybe that's the beginning of a movement to utilize gold to regain the public confidence in the currency, right? Well, in order to cover all of the debt that's out there on a global basis on a 1-to-1 ratio, which is probably not going to happen immediately. I would be surprised if it did. We're not ready for that yet. But in order to be at gold's fundamental value in relation to dollars and relation to the debt on a global basis, you would see spot at $40,000 an ounce. That's way, way, way higher than the 3,000. but that is a reality. It is severely undervalued because it benefits the governments. With silver, silver had been forming, I don't know how to do this in a way to show people, but in a wedge, like a wedge of cheese formation with a series of higher and higher lows and lower highs. And when you get that technical formation, if it breaks above that wedge, if you kind of think about what it looks like for a wedge of cheese, when it breaks above that wedge, then it's going to jump up just like you saw gold do. Gold has finished some technical formations, that cup formation, and it did break out, and then it was suppressed for, to your point, a couple of years. They kept pushing it back. Now that has been released. And with silver, this could be, I'm not prepared to put my technical neck on the line yet on this, but this could be on their way to concluding that cup, because in both cases, gold and silver are severely undervalued to their fundamental value.
During the interview, Lynette Zang observed that central banks resort to printing money when traditional tools like interest rate adjustments are exhausted, thereby accelerating the process. Regarding the purchasing power of fiat currencies, Lynette underscores their value to decline further. She contrasts this with the enduring value of tangible assets like gold and silver, emphasizing their universal functionality across global economies. America's ongoing indulgent fiscal and monetary policies cast uncertainty over the long-term purchasing power of the U.S. dollar, exemplified by its 99% appreciation against gold since 1972. History records that the domination of a particular reserve currency inevitably ends. Pressure for change emerges over time. The shift may occur abruptly, triggered by unanticipated and often trivial events. From Lynette's viewpoint, the global financial system is evolving rapidly. She indicates a potential transition to a one-world currency, likely the IMF's SDR, propelled by emerging financial technologies. Let's get back to the interview.
You have to understand that the only difference between inflation and hyperinflation is the speed of that inflation. And when you are all out of bullets like the Fed is, all they have left are dropping those interest rates down and printing more money. That's all they have left, right? So when Ernest Hemingway was asked, how is it that you went bankrupt? He said, slowly at first and then fast. And so really what we see happening, and this impacts, it'll impact the world, but it impacts the US more than anybody else, is new financial plumbing being put in place. Right now, the global financial plumbing is based upon the US dollar and the Treasury, the US Treasury bonds, but they're putting the new financial plumbing of rapid payments and a shift into the new system, which is more than likely to be, what they're working toward, very obviously, is a one world currency. And so we'll have this umbrella that's, I've been saying this since 2009. We're going to find out. I'm either going to be right or I'm going to be wrong. But I believe it will be the IMF's SDR, special drawing rights, because that is a basket of currencies without limits. So they could put every single currency in that basket, kind of like what Zimbabwe is attempting to do with a currency basket with a component of gold, because the public confidence in the currency and the system has been lost. So they're attempting to regain it. But we'll have one overarching currency with what the biz is proposing, one ledger to control everything, to keep all the data in one place, which is so much easier to control, or separate ledgers that are all interlocked, but still, again, controlled by one entity. And I personally think that entity is going to be the IMF, the International Monetary Fund, because the members are all Treasury secretaries and central bank chiefs, all unelected officials, I might point out. But if it's a basket of currencies, we can have that one umbrella currency, which they're working on, and then that can easily be translated into a local currency. So say in the US, a digital dollar or a digital euro, which everybody's working on voraciously. But once that new plumbing is in place and the BRICS have started that, et cetera, and they turn that switch, out of the US dollar plumbing system into whatever the new CBDC brick system is going to be, boom, just like that, you better be ready because you're not going to have any warning. You can see quite clearly that the purchasing power of the dollar is continuing to go down to zero, right? Just like this is a $200,000 dong, Vietnamese dong. What can you buy with this? Absolutely nothing, right? Doesn't matter how many of these you have. What matters is what you can convert it into, which is pretty much what George was talking about when he was in Argentina. Just recently. People don't want gold or silver or cryptos. They want the goods and services that you can buy with that. What's the difference between, doesn't matter. This is 500 million bolivars, and it has more value as a napkin for an empanada than it does to buy anything with. But this always has value. This always has value. Why? Well, because these are used in one place. The fiat money place. These are used in every single sector of the global economy, period. So you have no functionality here and or just one place. And you have pure functionality here because much as they have attempted to recreate the same qualities of gold and silver in the labs, they have been unable to do it.
Over the last 40 years, the purchasing power of the world's most popular currencies has declined against gold. Despite efforts to suppress gold, prolonged suppression continues to fuel upward momentum, with Lynette suggesting that undervalued gold could reach $40,000 per ounce. With the move towards a single global currency and the lasting value of assets like gold and silver, how will the future of money look? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.